We have over 600 vendors worldwide. There's a lot on our plate, way too many emails. But
Look, we starting. We gonna give it a little smooth talk today, right? Welcome to your session. It's your boy Seven Figure Trader coming to you live on tonight's session right now. Let me stop playing. But I get in trouble for my music all the time, so we just trying to do something a little bit different. But I don't want nobody falling asleep as we have our third session for me. Welcome to the call. Welcome to the call, everyone. Thank you for joining me. Today is part three of the Illustrator strategy training. So today we will be going over the advanced methods of my strategy. So we'll be looking at Fibonacci, we'll be looking at news impact, as well as we'll be touching on trading psychology, as well as encompassing the other things that we had from sessions 1 and 2, which is our risk to reward, EMA, RSI, risk management, pip counts, candlesticks, identifying trends, breaks, rejection, and retest, right? So we've already covered all of that stuff in depth in our sessions, part one and part two. If you guys have not seen that one, let me go ahead and get that link for you guys. I don't know why it always comes to this video, but right, let me go ahead and grab this link for you. I actually put together a playlist for you guys, if I can find it. It's called How I Trade. There we go. Can I share the playlist? Or do I have to share? Okay, whatever. I just sent you guys my full YouTube page. If you go into my playlist under my YouTube page, you'll see a playlist called How I Trade. And that's going to be where you can find all of the previous sessions recordings. Boom, right? That's where you'll be able to find all the previous session recordings in case you missed out on part one or part two. And if you're tuning in for the very first time, I just want to welcome you. You may have come in through someone who referred you. You may have come in through the YouTube channel. You may have come in just through an Instagram ad, right? But I just want to welcome you to Back at Zero, the only place that's providing you free education, free pre-recorded videos, free trading signals, and free live sessions. We have over now 15 educators in the Back at Zero supporting everything from English to parler français to Espanol, right? Look, my Duolingo, I'm on streak 10, right? Like, let's go. But, right, we're international now, right? So, shout out to Africa. We just came back from Africa not too long ago. We were out in London, right? Shout out to the Utes, right? And then we're based here in America, but we spread this impact worldwide. And so, I just want to take the time to appreciate and welcome everyone who's new to the community, who's new to the family, who's new to the call. So again, if this is your first time on the call, I did go ahead and drop that link to my YouTube page so you can reference part one and part two. Also, there's a big flyer on the screen that also shows you guys my YouTube handle. And then tomorrow, right, if you are looking for those live session calls where we're actually getting into trades and everything like that, then we will be back tomorrow, Tuesday through 30. This says that I'll be on at 10 a.m. Eastern. It'll be about 9:30, right? Just to go over markups. We'll start at opening candle. We may start pushing the call back to 10 a.m. I'm not sure. We'll see. But for tomorrow, it's going to be 9:30 a.m. Eastern, where we'll be starting the call at opening candle. We take trades at 9:45. So I'll have everything marked up. And you guys let me know, right? You guys let me know that so we got some feedback said on the live trading calls, we wanted to do less teaching, less analytics, and more just getting to the money, right? So that's some of the feedback that the education department got that we're going to start to implement. But you guys let me know, right? If you like educational calls, right, drop a 3. If you just want to call for live trading to get to the money, right, drop a 5. I just really want to know what the temperature is. Again, and I suspect everyone on this call is going to drop threes because you guys are here for an educational call. But right, but for the Tuesday through Thursday calls, right, we want to make sure that we give you guys as many sessions as possible, right, where you're actually taking trades with the educators. So we've been moving times around a little bit, but we've also added 2 to 3 calls, right? Shout out to all my educators. Shout out to the newest educator, Andy Sanchez, right, all the way from DR. Shout out to Emil, right, who had his first session today, French education, coming in all the way from Paris or right outside of Paris, right, and then nonetheless, right, all my other educators on the platform who've been absolutely killing the game. They said 3 and 5. They said we want education and we trying to get to a bag. Y'all greedy. Y'all greedy. I could look at y'all. I probably look at y'all trading account and I'll probably see a little bit of greed in there. But no, it's all good, right? It's good to be greedy here, right? With education and everything. Real quick, let's start off, right? Because what's better than looking at live trades? So, right, so I do want to go over, right? We'll look at this BTC. Is this BTC? Yeah, so this is going to be our BTC setup from today, why we took it. If you also, right, we had went over this trade or this setup on Sunday session. We did all of the markups on our Sunday weekly outlook. You can find that as well on my YouTube, where we just marked up some potential zones in which we were looking for price to go. We didn't set any entries or anything like that, except for on Solana, which we never came to. Right, but I do want to go over this trade and why we took it. Let me come back here a little bit more. Okay, so right, so let's go ahead and go through our steps as far as for our setups. So right, so we got the break and close on the 3 minute. I'm liking the 3 minute much more than I like the 5 minute. So I'm actually getting rid of 5 minutes and I'm just going 3 15 1. So right, so we came and we got the break and close on the 3 minute here of the structure for BTC. We did have our RSIs underneath. We were overbought, right, on our RSI. So we did not have RSI on the 3 minute, making this a 2 out of 3 setup. right? And if I'm going a little fast, that's because we've already done some of this analysis, or we've already gone over some of this. So I don't want to take too much time going over the things that we touched on the previous calls. That's why we have them recorded and available for you guys to access. Coming here though to the 15 minute, we're still getting buy alerts. But coming here to the 15 minute, right? We have the EMAs underneath, again, overbought. This candle hadn't closed yet, and we had not got a previous break. So this will be a 1 out of 3. So we'll be looking at a 4 out of 6 currently. Would it be 4 out of 6? No, it was 2 and 1. So right, 3 out of 6. 1 hour, again, we hadn't got a close yet, so we can't count that overbought, but we do have the 50 EMA underneath. So again, that would be a 1 out of 6, right? So this would have been a 4 out of 9 trade, so around 50%. So right, so not a bad setup, but right, probably not the best time to get in. And again, it's kind of easier to say that after the fact, right? But again, I want you guys to understand what you want to be looking at real time. So again, right, we saw from part one, we got our candlesticks, we got the break, we identified the trend on the call yesterday where we had the downtrend. We broke out of the downtrend, came into consolidation, and so outside of the consolidation, we were looking for buys outside of this buy area. If I go to the higher time frame, it should show me. Let me go ahead. I'm gonna take this off so it's not confusing. Right. So on the higher time frame, we understood that we broke this downtrend. We came to this buy area that we had marked up from Sunday. We were looking for it to come down, reject down here at the bottom, and then we were looking to get in on the way up. So that's exactly how we were looking for this to play out. So, right. So, but we understand we had a 50% chance for this setup. So if you were going to take this, you would have did it with reduced risk. Now, our TP1 was a great risk to reward ratio. It was a 1 to 6. Now, again, hindsight, right? In hindsight, well, let's play it through, and then let's talk about some of the things we could have did better, right? So we got the initial trade set up, and then one thing to note is that we got in at 850, right? Which is before our 930 candle. We talked about this last week on session 2. I asked people like, hey, what's better? Do we take the setup, right? And do we take the setup when we get it and then potentially risk hitting stop loss? Or do we wait until after the 930 candle, but potentially risk being able to enter the trade, right? So this was one of those examples. And I told everyone like, hey, I'll start sending the trade signals early so then you can do what you decide or what you want to do, what you feel like is best. So me, I waited till after the 930 candle, but I did send it right for you guys. We hit stop loss, right? We had a very tight stop loss of under 300 pips, which is an extremely tight stop loss for BTC. So we did hit stop loss, and then right after the 930 candle, right, approximately around 10 a.m., we got another break and close. Better entry, right? Better entry that we were able to take. And again, right, I was very confident since this was a small, tight stop loss. Our TP1 was a 1 to 6. Anything that we lost, right, we would have made back. If anything, this would have been a 1 to 5. Right, if we risked the same thing here on this entry and this entry, right, this would have been a 1 to 5 with hitting TP. So let's see. We call re-entry here. Much smoother setup, much smoother entry. Let's go ahead, get into it. Little dive down. Right. So much smoother setup, much smoother entry. We called it right here on this candle. And then right, boop, boop, boop. So even at right now, and I let everyone know, hey, we're at a 1 to 4, right? 1 to 4, 1 to 3, something like that. It was in the chat. Right, we're already at a 1 to 2.6. So let's see here, ran back up. So I want to say this is the height, around the height that we hit. We missed TP by 200 pips, but I let everyone know when we were at about a 1 to 5, right? Great money out there for a trade setup. I said, hey, go ahead and take some partials, recoup anything that was lost from your initial entries. So right, so even if you took the first entry and it hit stop loss, The second entry, taking partials right here, you still made profit. You made enough money to cover your first entry and still because we were at a 1 to 4 or a 1 to 5, right? So that's going to be the benefit. Now, again, right? Hindsight, right? Hindsight, even though this was a money making trade on the official record, this would count as a break even trade because it did not hit target. So, right. So, in hindsight, what I should have did and what I usually do that I didn't is I usually always make that first TP, even if I'm getting this 1 to 6 as my first TP based off of structure or based off of Fibonacci, right? I usually always at least still make this first TP a 1 to 3. That way, right, we have that gratification. Or for my TP1 warriors, right, you're automatically taken out of the trade. But this one required you guys to do a little bit more manual work in regards to taking partial profits, right? So this was a great trade setup. It just didn't hit TP, right? So if we see how it played out, came all the way up. We missed TP by 200 pips, came to about a 83,900. We were looking for it to go to 84,155, right? So about 200 pips missed that one. But right, so but this was putting or encompassing part one and part two, in which we were looking at risk management. We were looking for the break and close. We were looking for the retest, right? And was there anything? Oh, and we were looking at the EMAs and RSIs, right? So that's just a quick recap. Now, right, I need someone to let me know something to mark up, right? We need to mark up because now we're going to go over Fibonacci, right? Fibonacci and trading psychology. So like I need something. We're going to do a fresh markup here on session so you guys can see it full span, how I do these markups, how I find my entries, right? How I find my TPs. Very similar story with ETH today as well, where I go ahead and wait for you guys to drop a pair in the chat. This was entry one. This was entry two. We missed TP by 100 pips, right? Came up here wicked and just missed it. This was a nice 1 to 3. So again, on the official record, this account as a break-even trade, right? But again, we came up. I told everyone, hey, feel free to take some partials because we were at about a 1 to 3 risk to reward ratio. TP1 was at a 1 to 3.2, right? If we would have came again, right? If we would have made sure TP1 was just at 1 to 3, right? We would have hit that for sure. So those are just some little tidbits or some little heights. But again, right, no one should have lost money today. Everyone should have made money, even with us hitting 2 stop losses, right, before taking our second entries and going and hitting a 1 to 3, and then as well as a 1 to 4, right, which is a 1 to 7 total. Even with taking away the 1 to 2 for the 2 stop losses, today was still a 1 to 5 day, right? So this was a 5% day without hitting any TPs. They said GU, so let's go to GU. Give me regular Forex. There we go. All right, so right, so what I like to do, or what I start off with Fibonacci, right? So Fibonacci is going to be many things, right? So in a whole, Fibonacci is a strategy or a mathematical sequence that some people believe is going to give you the answers to life. You have Fibonacci all around you, from the way that the flowers are formed to leaf petals to a lot of things, right? That mathematically always come down to Fibonacci. It's kind of like pi, right? Where pi, people feel like pi is a mathematical number that, is just of extreme importance that solves some mysteries. So Fibonacci is very, very similar. But in our sense, what we're going to be focused on here for Fibonacci is just going to be, again, right, looking at percentages. I'm very much a numerical guy, or where I'm focused mainly on numbers, right? So what Fibonacci does is it measures retracements in the market. We understand that in order for the market to go down, it must go up. In order for the market to go up, it must go down. So just to make sure that you guys is with me and we're just not zombies on the call, right? I need everyone to go ahead in the chat and drop what goes up must come down. Drop it in the chat. What goes up must come down. That's forever going to be, let me go ahead and go to live chart. That's forever going to be always important, right? And especially in your trading psychology, because people get caught in what's called euphoria, right? Which is where we just feel like, oh, Bitcoin is soaring to the moon, buy, buy, buy. But what goes up must come down. Same thing, right? When the market is sinking, a lot of people are paranoid. Hey, Bitcoin's going to zero. The stock market is crashing, right? We're going into a recession. But what goes up must come down. And what goes down must come up. So, right. So Fibonacci is what's going to help us be able to measure some of this. So, right. So and you can do it on multiple levels. So the first thing you want to do is figure out what fragment in the market are you working with, right? And all a fragment is going to mean is what portion of the market is important, or what portion of the market are we looking to use to analyze, right? So let's say we were coming to this portion of the market and I wanted to say, hey, I want to see what some potential sales are or some potential buys. So I can come here, and the first thing is I want to do is I want to identify my tops, right? What is the high and what is the low that I'm working from? So for this particular segment, I'm on the 4 hour chart, right? I'm going to say, hey, I want to pay attention to this high, right? Because this is my highest high, and I want to pay attention to my lowest low, right? So that's going to be my high. This is going to be my low. And so what I want to do, and this is why I use the magnet over here on the side, in case you guys ever wonder what this magnet is for over here. The magnet is so then you can just simply lock onto the top of Wix, right? A little bit easier. So, right. So, and you guys may see me sometimes when I switch to a line chart. I only switch to the line chart for marking up trends. I like to use the full body of the candle or the wick in order for me to be able to do use Fibonacci. This is why it's important, right? Why in lesson one we talk about candles versus wicks. Um, well, right. So this is going to be my Fibonacci retracement from the high to the low. So now what are these numbers over here telling me? So first off, these are the Illustrator settings for Fibonacci. So if you do Fibonacci and it doesn't look like this is why. These are my specific settings that I use for the Fibonacci, for the Illustrator strategy. So right, so 38.6, right? What is 38.6? 38.6 is going to be your first line, right, of resistance. Now, 38.6, what does it mean for a trend? For a trend, if we come to the 38.6 and we reject, right, this is an indication that the trend is strong, right? If it bounces or rejects off the 38.6, that means that the trend is strong. Some people call this the shooting star for some methods or for some trading styles, right? It's called a shooting star. But the 38.6 is going to be your first line of support or your first line of resistance. So, right. So in this case, we're looking for retraces towards the upward. So this is going to be looking for buys. So, right. So I always come and I always put my entries at the 38.6, because what does that really mean? 38.6 means that, hey, if we come and we break this structure, that this longer is a trend is going into a retrace. And then now the other areas of a retrace, right? We have a 50% retrace, a 61.8% retrace, a 78.6% retrace, and an 88.6% retrace, and of course a 100% retrace. So the other numbers that are important, right? 50% and 61.8. This is going to be somewhat of a factor, but right, this isn't really what I found to be is the 15 to 61 don't seem to be accurate all the time, right? So what that means is what I like to say is 50% retrace is a 50-50, right? 50% retrace is a 50-50. You have a 50-50 chance using the 50% retrace. So right, so I mainly focus at 38.6 and the 78.6, right? Now, depending on what I'm doing, right, or depending on how I'm looking at it, because again, right, I'm going through multiple time frames. The 7.8.6 and 8.8.6, this is going to be what I like to call my institutional zone. So, right, so my institutional zone is going to be, hey, the 78.6 and 88.6 is going to be the most likelihood of a reversal. So, right, so if we do retrace, right, more than likely we'll come to this area. And then at that point, we're going to come and reject back down, right? So this is going to be how I mark up or I find my sell areas, right? So I understand that this is my sell area on a large time frame. So I want to make sure that even if I'm buying, I remember that, hey, this area is more than likely going to be where we start to come back. If we retrace, we're going to come back. More than likely, we're going to reject in this area and come back down. Now, does that mean I just take sales from this area? No, right? I want to see how price reacts. But this is where I'm going to look for that reaction in that area for sales, right? So go ahead and drop in the chat so I can make sure you following along, right? Drop the word reaction, right? Because that's what we're looking for. We're looking for reactions, right? I'm just checking the chat. Well, checking the chat. I see y'all locked in. I see y'all locked in, right? So we're looking for reactions here, right? And then this is going to be for this case, right? Because we've already come up and we're already near this area. So this would be my buy. And this is more of a swing style because we're doing it off the 4 hour. So you always have to remember, hey, I'm on the 4 hour. So if I'm doing analysis based off the 4 hour, then it can take, right, a few days in order for this move to happen. But I'm also going to throw my other thing I'm going to throw there is a TP, right? Because again, if I'm trading, I want to make sure that I take some profit over there. So, right, so now I have a potential buy entry and a stop loss. The other thing, right, I can do is if I want to come here, right, because again, I know this is my sell area. I placed off of this high and this low. Maybe I want to go off of this high and this low, right? And let me go ahead. We're going to mark this up, but we're going to make it a different color, right? So let's say we go off of this one. And I could be doing this because I'm like, hey, I really want to tighten in to get the best entry. So I'm gonna come to a lower time frame, and then I'm going to see if I'm able to then come and find an additional entry, right? So I can come down here, and depending on where you are in the market, right? So if I line it up from this high to this low, where entry is still about the same, right? But now I have this lower 78.6, 88.6, which means that off of this move, all right, let me delete some of this because look, we got a lot of drawings going on. I don't want nobody to get confused. Right. So off of this one, right, I understand that now this is a potential sell area or a retrace area on a lower time frame. So I'll mark it up like that. And I'm also going to make this a TP, right? So again, right, I'm taking TPs every time that I'm coming to an area of resistance, right? So, right, so I have my entry. I have one TP. I have two TPs. Now, next thing I'm gonna do, I'm gonna go down to a lower time frame, and I'm gonna find my stop loss. And excuse me, how I find my stop loss is going to be based off of structure. So now that I have this line here, I want to see at what times when we came above price, right? At what price did we find stability? Right? So we came up here, we fell back down. We came up here, right? We fell back down, but then we bounced back up. So right here, I'm looking basically for where is going to be this area of support where I see that we broke above, right? And we may have came back down, but I want to see the most areas where we broke above and then we stayed. So I'm gonna see about right there, right? Because I'm looking at all of across the board. I see when we came here, right? We found some stability here. Then we broke down, right? I understand that if we go below this point, we're going deeper, and I'm not trying to go that deep. Same thing over here, right? We broke above. When we came back down, found support, continued, right? Came over here, we broke down. We found some support, but then it broke down lower. Not trying to go that low. Came right back up. Now we see here, right? Found support. Came back up, found support. So we understand that this is pretty much an area of support. If we break down below this, like we did over here, we really want to exit this trade. We want to get out because it's going to dive deeper and we don't know how deep it's going to go, right? So this is how I'm looking to set my stop loss. Now, right? And then you would come in and you can tighten it based off of, again, what your strategy is in regards to like how big you want your stop loss. Because let's see here. And let me go ahead and pull it up for you guys. I'll show you guys really quickly. I didn't have this on my first presentation, but I have it now, so I show it to you guys. But basically, it's my cheat sheet, right? It's my cheat sheet on how to count different pips or different pairs pull it up for you guys. I share the screen. Cool, right? So we have GBP USD, right? Which we have for an example. So we want to look at the third and fourth number in order to calculate how many pips this stop loss is, right? So from 74, from 35,742 to 36,242 is a total of 50 pips. Because if we add 50 to 74, right, it's going to push this to 36 and leave us with 24. The last number is called a micro pip. The micro pip does not matter, right? I just put the micro pip there for this example for symmetry, excuse me. But all right, the micro pip does not matter, right? It does not matter. You could have left this as a zero or whatever. It would still be 50 pips. So let me now going back to right. So take your screenshots. 3, 2, 1. Now coming back over right to trading view. So we know, right, we're looking at the third and fourth decimal to go ahead and calculate this from 2920 to 2910. How many pips is that? Drop it in the chat for me. How many pips is that from 2920 to 2910? How many pips is it? Who's going to get it first? Nadia. Nadia been killing the game, right? 100% correct. So this is a 10 pip stop loss, right? So 10 pips, not that much for GU. So I think that that's a pretty good stop loss. So now I have my stop loss. First thing I always want to make sure to go do, right? Just like we looked at the last trades, I want to make sure that my TP1 is around a 1 to 3, right? So it's a 1 to 3.15. As you guys see, we did miss that last one, right? So what I'm going to do is I'm going to come here and I'm just going to put, let's see here. Nope. I'm trying to get it to go to I guess you can't do it automatically. Well. Scroll it up here to about 3. I'm going to bring my price down a little bit there just because I want to make sure that we don't miss. And then what I always like to do is I like to make my numbers whole numbers. So right, so this number is 52. I'll probably drop it down to 50, right? I don't care about those 2 pips. I just like to use whole numbers, right? And I usually like to have numbers that end in a 5 or a 0. So this one is 83. It's closer to 85. So I'll take that to 85 as my TP, right? And that's just the me thing, right? But so I use this high to this low to find TP2. I use this high to this low, right, to confirm entry and to find TP1. Now, for TP3, right, or whatever you want to do, because let's see here. Remember, we base this TP off the 4-hour or off the height. So, right, so I really probably want to split these two TPs. So for that, you can either use the 50%, right? If I come back out here, oops. If I want to use the 50% lines, that's what I can come in here and add usually. So so TP1 is about the 50%. We know TP2 is right here at the 786. So if I want, I can come over here and I can throw a TP right there on the 60%, right? If I want to use the Fibonacci, or right, if you just, simpler or simpler to me at least, right? If I want to come here and I split, I know this is a 1 to 3. Well, this is a 1 to 2.6 now. This is a 1 to about 6. So the difference is about a 1 is about 4. So I'll just add 2 to here. So to take this one to a 4.5, or we just say 4.0, right? Boom. So I just split, right, my 2 TPs that I was able to get using the Fibonacci's. The other thing that I can do also, right, using what's called my Fibonacci extensions, because understanding that this retrace right here, let me delete these, right? So we understand that we lose these, right, for the downwards Fibonacci or for the down move. Now I want to show you how you can use Fibonacci going upwards from bottom to top, right, to also give you extensions. So you would do this if I was looking for sell entries, but this also helps you with getting your TPs, right? So from this bottom to this top, which is our most recent bottom to top, come here, take this bottom to this low, right? And it's going to show us support, right? So we had support right here or our buy area, which came down, right? We came back down, bounced off this area, this buy area, which then pushed us into our buy, right? Now, the other thing that I have here is our extensions are 71% and 127%. So, right, so if I was looking to see, this is good for when you're looking for all-time new highs, or if you don't have anything to base it off of. Again, let's see here. If we go to the left, we could have based it off of something over here, right? We could have used the data to our left, but I just wanted to show you guys how to use extensions to then also find potential. So, right, so I understand that we came here to the 71.8% retrace, or excuse me, we came here to the 71.8% retrace. Again, we understand that this most likely is going to be the area in which we're going to see the market reverse. So we did see it come down. We see it bounce here, reversed to the upside, right? We did do about a 38% retrace because we understand that this is the 38% where we're at right now, which is a strong resistance level. We did break above this resistance level though here on the 4 hour, as well as we broke above on the 15 minutes and the lower time frames as well. But right, we seen it come down here. Now we understand that these are our TP1s, our TP2s, our TP3, right? But if I was looking or if I was swinging this, and again, I was looking for that next area. What is this right here? I don't know what this is. But this right here is how you would use extensions to find that TP. You can also use it on a smaller time frame here to sometimes get your TP1. So I could take it from this bottom right here. Oops. Right, this bottom right here to this high, right? Let's just say that. Now, this doesn't make sense for how we have it marked up because we already have an entry. So I wouldn't do this after I have an entry. But right, if I was doing a markup and again, I needed a TP, right? Boom, my extension levels is showing me right here based off of this retrace. Now, this would it be playing off of here? So basically, we would be looking for it to come down here to the 38.6, which is right above our stop loss. Again, remember 38.6 being the strongest area of the trend for a continuation. So we'd be looking for it to bounce off of there. And then more than likely, this 71.8 is usually the next area that it hits or that it goes to when you're doing the Fibonacci's. That's where I like to use the extensions because it's all based off of mathematical equations saying, hey, if you do a 38.6 or even if you do a 78.6 retrace and we come back to the upside, this is the next target or the next area in which price is looking to go based off of mathematics. So I know that's kind of a lot, right? That's kind of a lot, and you guys will see it more as you use it, right? The different time frames and the different scenarios, right? So someone else give me another thing to mark up, right? Give me something else to mark up so I can try to show you guys one more time how to go through this, and then I'll take some questions and we'll wrap it up from there. Right? But I love to also because this provides, if we were already in the trade, right? We were already in this trade and say I was looking for, validation of this trade. That's pretty much what I would use this for. I would say, hey, if we do come down, we have support here above stop loss. So I know if we break down below stop loss, that the trade most likely isn't valid because we're going to retrace. We may come back down here and test, right? Again, my 786 zone, 886 zone, my accumulation zone is also lining right here with support. So, feel me? Again, I will be strongly confident in this trade, but sometimes we can be early, like we were today, where, hey, if this does come down, breaks down a little bit lower, I'm not going to panic. I understand that I may be able to get a better entry down here, or I'm going to wait for price to come down here, react, then come back and then take it on the way back up. But we're holding this area, right, which we know is the 38.6 from high to low. We're holding this area that we broke above, showing strong trends, right? And I don't trade GU. I don't trade GU, but this is a real markup, right? Let's see here. I just want to see. Yeah, right. And I don't trade GU. But right, I want y'all to screenshot this and then let me know, right, how did you turn out. I'm gonna put on parameters. So then, right, I'm gonna put on alerts. So for everybody in the session, when y'all see me come in the community and I'll be like, yo, GU hit TP, they gonna be like, yo, seven called a Forex trade. Nah, but we looked at one, we marked it up, and right, again, this is valid to take. So right, so based off that Fibonacci, I understand that my extension lines right up where my resistance level is and right where my TP1 is. So this will give me strong confidence for this buy. I have confluence on not just my retrace from the high to low, but also have confluence right on my Fibonacci extensions from low to high. So right, so I'm using both sides of the Fibonacci from high to low and from low to high in order to add confluence for a buy. Gold. You want to look at gold again. I knew it was a bunch of greedy people on the call today, right? It's not look. When I call y'all greedy, just understand. Because look, I already know gold been running hot. Everybody want to trade gold right now because gold been running hot. All right, look, it's okay. I understand. I understand, right? But this is also going to be a good example of the Fibonacci extensions, right? Because gold is at an all-time high. People's like, oh, okay, how am I supposed to find a target for gold, right? So I would be looking directly here, right? Let's identify our highs and our lows, right? So if we come on here, right, this is obviously going to be our lows or our base, right? Then we'll be looking to identify a high. I don't like to use open candles, so I'm going to use this high right here. So from this low to this high, right? What's my next target? Right here. That's how I would find my next TPs for gold, right? Is using my Fibonacci extensions. So I would place that first, right? Because we're in the abyss. We're working in the abyss right now. Now, the only thing with working with Fibonacci's is that it doesn't allow you to chase the market, right? You have to wait for a retrace because I have nothing here to like to come top to bottom because we're running hot. So with these though, you don't have the ability to chase the market. Excuse me. But so for this one, we'd only be able to mark up some sales, right? So from this bottom to this top, right? If we were looking for a sale, we'll be looking to take a sale here, 38.6, right? Have my TP here, 786. Again, we're on the 4 hour. So after I do that, I want to go down to a lower time frame. Right? So we're working off this low to this high on the 4 hour, but I see now we have this low to this high on the 1 hour. So I can come here, mark this up as well. So now this is going to give me a little bit better entry for my sale. So I'll take that as my entry, take this one as my TP1, right? Then come here to my 15-minute. I'm gonna be looking to see when we come and dip below this level, what is the height in which we stop? Well, so it's about right here where I see it came down, came back to the top, came down, came back to the top, broke down. We did go down a little bit deeper, then it came right back up, then it topped out here, came back down, right? So this would be my stop loss, and let's pull it back up for gold on how to count pips. This is like again, guys, right? It's not a bad thing to reference, right? And you could use the ruler, but I'm very much just a person that's like, hey, let's go ahead and figure out how to manually calculate this. So, right, so for gold, what do we have? Gold. How many pips do we have? We have three numbers behind, right? So we'll count it like USDJPY when we're looking at the first two numbers to count these, right? To count pips. So for gold, the first two numbers for our entry is 7, 8. And then let's see here. And see, this is the only thing too, sometimes where you get different based off which ones you're looking at, you may see different numbers. So like, let me switch back here to you guys so you can guys see what I see. So now, right on this gold, right, we see that it's only two numbers behind the decimal point. So the actual ways to count is similar to ETH, right? I don't know why the other one has three, but right, sometimes they be just trying to throw you off. So we're going to calculate it based off of the two numbers, right? And we understand that the third number is a micro pip. So, right, so based off of that, if we're looking at the last two numbers going from, going from the whole number, we're going from 16 to 23, right? So that's approximately how many pips, y'all? From 16 to 23. From 16 to 23 is how many pips? I'm looking at the last two numbers on gold. We're looking to get in at 3,116. Our stop loss is 3,123. How many pips is that? If we're basing it off of this, I want to look at the first number and then I want to multiply that number by 10. So from 3,116 to 3,123, how many pips are we looking at to risk on this stop loss? Anybody. I stumped Nadia this time, huh? 70 pips for sure. Look, yeah, 70 pips. So it's a 70 pip stop loss. So first thing I want to do, come want to make do line up. Let's see. I already understand that this first TP is not a 1 to 3, right? So at this point, I have two options of which I can do. I can lower my stop loss, right? If I want to lower my stop loss, I would probably lower it to down here. But understand that for me, that's just going to make it where I have more manual trading to do, right? Because I understand that the structure is up here. But sometimes you don't want to go with structure because you're like, hey, that's too big for my stop loss. So the only two options for you to do is to lower your stop loss or to raise your TP. But we understand that my TPs are really based off of structure. So more than likely, again, if we look here, TP1, I would hate to delete TP. I would hate to delete this TP1 and leave, right? Let's see if I did this, left it there. Oh, it was about right there, I think. So if I leave it there, right, and I'm trying to make sure I could go ahead and keep my TP2 and delete my TP1, but this is just a bigger move, right, where we may not hit TP. So what I prefer to do, right, is going to be to lower my stop loss, right, and then now my TP1 is a 1 to 2.6, right? That's something that's more applicable, and my chances of hitting this TP are much higher than me hitting this TP2, right? So you have to do that sometimes, right, afterwards, where you can't base your stop loss off of structure. You have to base it off of the lower structure on the lower time frames, right? So if I come down to the 3 minute, right, that's going to be my structure on the 3 minute, easily to be able to see that, right? And we're going to have to do that based off of risk. And that's what sometimes makes the trades a little bit more advanced versus having, a higher TP that you don't have to worry about exiting the trade and re-entering the trade. Sometimes it's better to do that based off of how the trade setup is. So like I said, with Fibonacci, we don't have any clear-cut buys. We would have to wait for a retrace. But let's go ahead and we can mark up a retrace. So again, right? So this would be again, if you guys want to take a screenshot of it, but right, this would be my sell parameters for gold to sell off. I mean, it's running hot, so I don't have any indication of why it would start to sell off. But if it did start to sell off, that's how we would mark it up. But let's see if we can rewind this and let's look for some potential buys, right? So like I said, Fibonacci, you have to have some retrace. So with this, right, gold ran up. And one way you can say, hey, Seven, how do I know if I'm in a retrace, right? You can mark up your uptrend. Let's see. This would probably be, let's see. It's an ugly trend line. Let's see if we're marking up this trend. Let's just say this was our trend line, right? It's an ugly trend, but that was our trend line. So now we've broken the trend line, we've gone to consolidation, and now we've started to retrace. How do I know we're in a retrace? Right? We broke that 38.6 coming from this low to this high. We've broke that 38.6. We're at about a 50% retrace, right? So you could have potentially took a sale here and had this be your TP, right? If you were looking for that, right? This isn't an uptrend. So first thing I want to do is I really want to find out my buys, especially if I'm working here on the lower time frame, because your buys and your sell can sometimes overlap. So I'm going from this high to this low of this candle. So I'll make this my entry for my buys, right? And even though we know the market buys after this, I'm showing you guys again using Fibonacci how we would go through and we will mark that up. Make my TP at the 78.6 zone, right? My first TP. And then, right, if I wanted to use my Fibonacci extensions, TP1, TP2, right? I will come in. Let's see. Where do I have some structure? Only structure I really see is right here from when we ran up before. Make that my stop loss. And I would come in, like I said, I like to make my numbers whole. Right? So 31,115 to 31,005, right? What's our stop loss? How many pips are we risking? Fast, fast, fast. How many pips are we risking on this setup? The market's moving. The market's moving. How many pips is you risking? You about to enter a trade. Are we gonna miss our entry because we don't know how many pips? Are we gonna enter blindly, not knowing how many pips that we're risking? Right, the market moves fast. Y'all know this, right? So that's why I want you guys practicing quickly, right, to be able to do this. So I come in, I look at this. Okay, 105, 115. The difference is 10. Multiply by 10. It's 100 pip risk, right? Quick, quick, quick. So we're risking 100 pips on this buy. First thing I do is I check my TP. See where we at. Okay, just want to make sure. First thing I'm gonna do is I'm gonna check my TP. My TP, this is horrible, right? It's 0.75. It's not even a 1-to-1. So right, so I know that TP is not going to work for me, right? If I come here and I look at this TP that we got off our extensions, this is a 1 of 4.75, right? We didn't mark up a second one. Let me see. Let me get the other extension there. Right, so there's my two extensions. Let me go. I'll mark up this right here. So I always remember this is my area of support. So let me see here. TP1, 1.4. TP2 is a 7. So, right. So, like I said, I always like to do 1 to 3. So I drop down this first one to a 1 to 3. My second one is a 1 to 7. So the difference is 4. So I'll make this other one a 1 to 5 to split the difference, right? To split the difference, come in, clean it up a little bit. Right now we got a nice little clean setup. Right, we will wait. Let's see how again. Oops, shoot, ran hot. So right, so we know we came in. We got the breaking above on the 3 minute here. We would have took our entry here. All right, that would have been our entry. We came back down. We see it's a retrace, right? I like to take re-entries on the way back up. So, right, this would have been my second entry, right? If we missed our first entry, I would have waited to here. This would have been our second entry. Let's see. I don't even, like I said, I don't know what the exact numbers ran to or anything like that to know if this trade would still have hit TP or not. But right, just again showing you guys. So it would if we had took this trade, we would still currently be in this trade. It would not have hit TP as of yet. right? But we would have seen a clear, right? Working off this Fibonacci retrace, we got a nice buy, found support, took off. So look, family, again, right, this may be something that you have to see over and over and over again, but the good thing about this is one, right, this is recorded. So you guys can visit my YouTube page to go and visit this video later. But also outside of that, right, we'll continue to work on this in the market. But right, and we'll also continue to do these trainings, looking at different scenarios, looking at different pairs. When you have different data, that's the most important thing to remember is that the candlesticks are your data. So as more candlesticks are printing out, that's additional data for you to use for your Fibonacci in order to be able to then know exactly how everything lines up. It did take me a while to start to train my eyes on which highs and which lows that I should be using, and which one should I do first? Should I do a buy first? Should I do a sell first? But again, you guys will get the shortcuts to all of this and how to put it all together, right? Just make sure you stay tuned into these Monday sessions. Like I said, Tuesday, tomorrow, we back at it again, 9:30 a.m. Eastern Standard Time, doing live trading. I won't show you guys the markups, right? Because I do my markups at 8:30, but we will have some things ready to go. We will grade our trades, see which trades are the best ones to take for our setups. The one thing we did not get to on this training is going to be news, right? The news, how the news acts as a catalyst in the markets, things like that. So we may revisit that, or we may make that a part more of lesson 2 for next time. But I do not trade based off of news, which is called fundamental trading. Shout out to Josh. Josh is one of our educators. He does fundamental trading where he trades based off of news. This is also right. My background is in banking. I've worked for Merrill Lynch. I've worked for Bank of America, Regions, PNC, and all of these institutions, they trade based off of news, right? Fundamental trading. I use technical analysis, right? But I understand that news acts as a catalyst where it brings volume to the market to fuel the move that we're able to then mark up using technical analysis. Market can only go one of two ways, up or down, right? So using Fibonacci's, we can mark up the buys, we can mark up the sales. So regardless of which way news pushes it, we can always be in position to win. So look, family, I greatly appreciate you guys for hopping on this call. Tomorrow, 9:30 a.m. Eastern Standard Time, we have our live trading session. And then tomorrow at 9 p.m. Eastern, we also have our Quantum Leaps call. Let me see if I can pull up that flyer for you guys real quick, real quick, real quick. If you still locked in with me in the chats, right? Drop in the chats just real quick. We're gonna get y'all up out of here. We already 1 minute over the session. And of course, my wheel is acting stupid. There we go. There we go. I see y'all still locked in with me. All right, cool. So let me get here we go. Here we go. Tomorrow, as I said, we have our quantum leaps call going into Q2, setting the tone for it, right? Make sure you guys are tuned in. My brother, my business partner, the Back at Zero founder, will be hosting this call tomorrow at 9 p.m. Eastern Standard Time. If you're already in the Back at Zero community, we'll be dropping the link. If you're not a part of Back at Zero, why not? It's free, right? But we'll get you in tune. DM me if you need the link, right? But again, I appreciate everyone for hopping on this call today. You guys enjoy the rest of your evening. We out.